Well, howdy there, folks. What a absolute beast of a video I have put together for you guys here today. We got to talk about what happened with Meta. We got to talk about the earnings and the stock price movement, which is absolutely shocking. Okay. Now let's start talking about some stocks. Okay. Let's get into some stock talk here. So first off, Amazon. Amazon earnings are coming tomorrow. Now, am I more confident, less confident in Amazon after I've seen now Google's earnings, I've seen Microsoft's earnings, I've seen Meta earnings, and all those matter significantly for ultimately Amazon. Google has a cloud business, so I've gotten to see their numbers. Google has an advertising business, obviously. I've gotten to see their numbers, right? And guess what? Amazon has the biggest cloud business, and Amazon has a huge advertising business, now their third biggest business, right? I've seen Meta numbers now at this point in time, which Meta is obviously massive advertising company, right? And you're not going to advertise unless you're advertising a lot of goods on Meta, right? And I've seen Microsoft's earnings, which Microsoft has an ads component of their business, but they also have a cloud business, right? In Azure. So based upon everything I've seen and based upon what I believe is going on here, I believe Amazon's numbers are going to be booming. I believe Amazon's going to report some phenomenal earnings tomorrow and likely some huge beats on several of the key categories, right? But with that being said, this does not mean that Amazon's stock price is going to go up tomorrow necessarily, okay? I think it definitely could, but it doesn't guarantee it at all. Amazon coming with the biggest beats in the world. Listen, folks, Microsoft came in with a grade A income statement, a grade A. And what did that stock get? It got a 3% gain. The stock's actually down in the past 3 months, even after that A grade income statement yesterday, right? What about Google McDougal? Google McDougal had an A+. We can call that like a 97%. If this was a test, they got like a 97%, okay? Google McDougal, A+ earnings. And what did Google get with it? Down 9.6% today. Down another 2.5 percentage points after hours. Are you kidding me? And it's not even like Google went into this like, oh, it's a super high PE stock. No, it's actually a super cheap PE stock based upon any of the trends this stock has had over time, right? So look at Meta, right? Meta was down 4% today, and it's down after hours. This is the craziest thing, folks. Let me be very clear. This was an A++ earnings from Meta. It's 100% perfect. If this was a test and the teacher was giving it, Meta just got a perfect score, a 100%. Look at the numbers, folks. And I told you the numbers are going to be shockingly great. And man, were they shockingly great. They killed what analysts were expecting, okay? Revenue grew 23% for them. Who was telling me last year Meta was done? Who was telling me? A lot of people. They were wrong, every single one of them. Costs and expenses dropped 7%, folks. Income from operations up 143% year over year. 143 flipping flapjacking percent. Net income up 164%. Diluted EPS up 168% year over year. That's it. That's it, folks. That's it. It gets no better than that. For Meta, it gets no better. For any stock, it gets no better. Their revenue came in at $34 billion plus versus $27 billion and some change in the same quarter last year. Their cost of revenue hardly went up compared to how much their revenue went up. I mean, it's insane. Research and development, they kept that pretty in line. Marketing and sales, they actually dropped that number nearly $1 billion year over year. General and administrative, they dropped that over $1 billion year over year. So here we are with the companies, revenues are skyrocketing and their costs are going down immensely. Are you kidding me? Total costs and expenses were actually down year over year by over $1.5 billion. Incredible. Income from operations came in at $13.7 billion. That's versus $5.6 in the same quarter last year. Net income came in at $11.5 versus $4.3 billion in the same quarter last year. You've got to be flip my flapjacks. Diluted EPS $4.39 versus $1.64 in the same quarter last year. I mean, folks, if I had to put this in music terms, this was the take care of an earnings, okay? This was a take care. It's like, that's the peak. That's the pinnacle. You can't beat it, okay? It's just, it's checkmate. It's checkmate, okay? Absolutely incredible. And then to add even more positivity around these earnings, The company now has over $60 billion of cash and cash equivalents and marketable securities as the end of the quarter. Over $60 billion. They now have total assets of $216 billion. That's versus total liabilities of $73 billion. It's $142 billion of stockholder equity. Okay. Now do keep in mind, this is very important. Okay. Very important when you see the cash number and you see the marketable securities number. Okay. Something that's very important everybody keeps in mind in regards to Meta is that number will likely, it's not a guarantee, but that number will likely go down over this next, I would call it 6 months or so. Now, why is that number going to go down? They're supposed to bring in crazy amounts of profits. The reason that number could go down, it's not a guarantee, but the reason it could go down, and it's important everybody understands this, is I believe the company is going to buy a silly amount of shares back over this next several months. Next several months, folks. I don't think it's going to be a small amount. I think Zuckerberg could come in and buy back $20 to $30 billion worth of stock over a short period of time. Not a guarantee. It's a possibility, and I think a realistic possibility. Being where the valuation's at right now, and being that they got the big share buyback on, and they got a lot of capital around, and they're going to have silly money coming in, and then guess what? 2024? Political season. Get ready to make more money than ever. You know how much is going to be spent on the presidential election? You know how much is going to be spent on any of the local elections? Oh my gosh, folks, okay? So money's not going to stop pouring in from Meta. It's just going to keep pouring in from Meta. My gosh, okay? So buybacks. Don't be surprised if they buy a lot of shares back. Look at the advertising revenue by geography here, folks. Shocking numbers. US and Canada, almost $15 billion. That's versus 12.7 in the same quarter last year. Look at Europe. 7.7 they did in revenue. 7.7 billion versus 5.7 in the same quarter last year. Asia Pacific, 6.8 versus 5.7 in the same quarter last year. And look at rest of world, 4.1 in this quarter versus 3 billion in the same quarter last year. I mean, every market was up a minimum of $1 billion just on a year-over-year basis. Like, let that sink in for a moment, folks. The business is on fire. And here's even a better part of this. Here's maybe the best part of this is Instagram Reels is still an early stage of monetization. Early stage of monetization. So when you got to understand, like, Instagram Reels has taken off like a crazy for a product for Instagram and honestly on Meta's platform as well, Facebook, right? It's taken off like crazy, but we're still early in the monetization time period, folks. Early. So IG Reels is going to ramp the monetization over the next several years. So if you think like, oh, IG Reels, this can't get any more out of that. No, they're like in like the second inning, I would call it, of monetization of Reels, if not the first inning, okay? It's very similar to like Tesla, right? Tesla ramps the Cybertruck over a several year period. It's not like all of a sudden, whoa, we're at max production. No, that's not the way it works. They ramp over a time period. Meta does it very similar in a very intelligent manner. They get everybody to use this product like crazy, love the product like crazy. Someone can say addicted to the product like crazy. And then they come in and they start ramping monetization. And they do that over a several year time frame, okay? So what you're going to see in IG Reels is likely bigger numbers over the next, not just several quarters, but next several years, folks, okay? Now, look at the net income, folks. Look at this. It's incredible. It does. I mean, this to me as an investor of the stock makes me so dang happy. Check this out. They did $4.3 billion in net income in the same quarter last year. Then they bumped it up to 4.6 billion, then 5.7 billion, then 7.7 billion, and now they just did $11.5 billion in net income. Where's next quarter going to be? 13 billion, 14 billion, 15 billion, 16 billion? Like, I don't know what it's going to be. It's just going to be a crazy big number. Like maybe a record, sky high record quarter for Meta overall in regards to their net income. It's going to be incredible. Incredible, folks, okay? I mean, my gosh, look at the diluted EPS. It went from $1.64 to $1.76 to $2.20 to $2.98 to $4.39 in diluted EPS this most recent quarter. What's next quarter? $5, $6, $7? Like, take your best guess. It's going to be a silly big number. That's what I can tell you. It's going to be a silly big number, okay? Now, also, if that wasn't, all the financials just booming for the company, right? And keep in mind, ads were actually down in terms of the amount of money they could get per ad was actually down year over year. Imagine when that starts to go up again. Family monthly active people. This is an important number. came in at 3.96 billion. Now, there was a view, if we go back to around Q2 2022, there was a view that, Meta has reached peak. They reached peak when it comes to monthly active people. They maxed out in Rona and they can't grow it anymore. Well, since everybody, a lot of people thought Meta had maxed out the amount of people using the service, they went from 3.65 billion to now 3.96 billion, folks. Incredible. Absolutely incredible. Okay. Now, this is Facebook. Keep in mind, Facebook, I've been hearing since 2012 when this company went public. Facebook is done. It's the next MySpace. They can't grow anymore, okay? And look they just grew again to another new record. Daily active users, came in at well over 2 billion, almost 2.1 billion Facebook daily active users on FB, okay? If you look at monthly active users, oh my gosh, well they're well over 3 billion people now at this time. Another new all-time high. So I've been hearing, like I said, for over a decade, Facebook's done. They can't grow anymore. And yeah, they just keep growing. Okay? It's incredible. It's absolutely incredible. Now, I told you guys analysts are too low with their numbers. Sure enough, I was 100% right. They're too low with these numbers for this year, clearly, because they were massively wrong on this quarter Meta just came through with. They're gonna have to bring up all their estimates for the next quarter as well. So these numbers you're seeing, the 1355 there, analysts are going to have to bring that number up to probably $15 of EPS expected for this year, which means next year they're going to probably have to bring up their numbers to, I would guess analysts are going to bring their numbers up to about 18 to 1850 expected for next year. So when you look at this stock, it looks already insanely cheap considering they're now growing revenues 20+% at 23 times this year's expected numbers and 18 times, but it's actually trading way cheaper than that. It's probably trading at about 21 to maybe 20 times this year's numbers, and then probably trading at, let's call it 15 to 16 times the 2024 expected numbers. I mean, come on. For a company that's growing revenues 20+%. Holy smokes. And this is with them investing so much money into AI. I mean, they could set themselves up to win AI more than anybody, while simultaneously winning the metaverse opportunity, VR and AR, as much as anybody. Like it's crazy. They're putting up these numbers while investing so heavily into the business. Okay, so in regards to stock, right? Based upon these numbers I'm seeing from Meta, based upon that conference call, I'm 100% convinced this is going to be $1 million plus position in 24 months. $1 million plus in 24 months. The way I looked at how lean this business is now running at this point in time, folks, and we're going to get to Tesla, Palantir, and a bunch of other stocks still here, PayPal, and all those others and what's going on there. But to just cap off Meta, folks, there's no doubt in my mind this is going to be another double up for Meta from here. And I know it's just had a huge move. It's going to double up over the next 24 months. And I think it's going to double up regardless of what happens in the macroeconomic landscape. Because Meta has leaned out the business so much now that they talked about doing some hiring, and that's great. But even if we got hit with a recession, Meta can easily cut back on the hiring like that. And Zuckerberg has just proved he can lean out the company as well as anybody. And he just proved he could lean out the company and accelerate the revenue growth in a massive way. That's the most beautiful thing. He proved to everybody that if I lean out this company, not only is it cutting costs, but we're actually going to accelerate our growth and we're actually going to move faster than just about any company in the world. And that's incredible because not many people could pull off that feat. Usually it's seen as, you're going to cut a bunch of employees. Well, your company's screwed then. You're not going to be able to move as fast. Nope. By cutting all those employees, they move faster now. Their revenue's way accelerated. Their product innovation's way accelerated. I got the Quest 3. It's an amazing product. I can't believe how much progress they made just since the Quest 2 in regards to that product. And I'm just looking at what they got going on the AI front. And I'm looking at the revenue growth and what they got going on IG Reels. And oh my gosh, okay. I feel so comfortable having that as my number one position. And I could make an argument that the stock's even cheaper now than it was at this time last year when it was a $100 stock. Based upon the numbers this company's putting up, based upon the way Zuckerberg has now managed his business and what he's proven. Incredible, folks. Absolutely incredible. I love having it as my biggest position in the public count. I should be buying shares tomorrow. Straight up. Now to speak about Amazon. Obviously, this is a big subject of the day, right? Certainly a big position for me in the public count. That should be my third biggest position in the public count. About $125,000 rolling into these earnings in the public count for Amazon, okay? First off, they had a crazy beat on their EPS. They reported 94 cents. I told you guys they were going to smash it. They smashed it more than I thought they were going to smash it, to be honest. That's a crazy number. 94 cents in like what I saw, most analysts were kind of in the 50 to 60 cent range for their EPS estimates. So just a shocking beat. They also beat on revenue by about $1.5 billion or so. So incredible beats right off the bat, right? Now, if we look at net sales, they went from $127 billion in net sales in the same quarter last year to $143 billion in net sales in this current quarter we're in for Amazon. That's incredible, folks. Just think about that. They had $16 billion like it was nothing. Up 13% year over year. If we look at operating income, this is one of the most impressive slides you'll ever see. Operating income was up 343% year over year. They went from $2.5 billion of operating income in the same quarter last year to $11.1 billion of operating income, right? And I think a lot of people can see why I was so happy to be a buyer of the stock very aggressively and why I said I got to add the stock aggressively, because I had a feeling they were going to flip their profitability in an immense way. And I'll be honest, they're even beating my expectations in regards to this. Their net income went from $2.8 billion in the same quarter last year to $9.8 billion. That's up 244% just on a year-over-year basis, folks. These are incredible numbers. Now, North America went from actually the same quarter last year, they actually lost money in North America segment, right? They just brought in $4.3 billion of operating income. Now, this is the best slide for me. This is the biggest and best slide for me. This matters more than anything else for me personally when it comes to this earnings, okay? Not for Wall Street, but for me. If you're just listening to this video, look at this slide in front of you right now, okay? Listen, operating loss in the same quarter last year for the international segment was around $2.5 billion. They just took a $95 million loss in this quarter they just reported, which means the international business is about to flip from huge losses to actual profitability. And that's such a big turn. That's such a big turn for a company overall when you have a segment that's dragging you down like that, right? And then you just lift those weights off you and they're off your shoulders and you've got that's not there anymore. And actually, let's say it is now a tailwind behind you. It's incredible. It's absolutely incredible. And that's what's going on with Amazon's business model. So this was, to me, was everything. This international slide. Most people weren't even paying attention to this. And I'm like, guys, I know you guys are so, all these Wall Streeters are so like, Amazon Web Services, Amazon Web Services, Amazon Web Services. I understand. But I wish they would just look a little bigger picture sometimes, because a slide like this is everything. It's everything, okay? Now, speaking about AWS, right? Obviously, always been the cash cow of Amazon and continues to be. Operating income went from $5.4 billion in the same quarter last year to almost $7 billion in operating income they just put up with AWS. And they reported 12% year-over-year sales growth, which is definitely headed back in the right direction when it comes to Amazon here. Free cash flow, this is on a trailing 12-month basis. At this time last year, they were at about almost a $20 billion negative free cash flow. Now, trailing 12-month, they're at positive $21 billion. What a change, right? If we look at their overall income statement, folks, this is an A-plus income statement. If you want to take a picture of an A-plus income statement, take a picture of Amazon's income statement right here. That's an A-plus. That's what, like, if you ever want to compare, how's my company doing versus that quarter that Jeremy called with was an A-plus. There you go, okay? That's an A-plus. Net product sales, $63 billion versus $59 billion, same quarter last year. Net service sales, $79 billion versus $67 the same quarter last year. Obviously, total net sales, $127 billion was this time last year, $143 billion they just did. Cost of sales was in line with what you expect. Fulfillment, they kept that in line. Technology and infrastructure, they kept that in line. Sales and marketing, they actually were able to drop that number year over year. When you can grow your revenue $16 billion roughly, and you can drop your sales and marketing and your general and administrative, it's the holy grail. Like, you got to be flipping my flapjacks. They kept operating expenses in check in such a major way. Operating expenses only went up around a little over $7 billion, but net sales went up over $16 billion. That's where the magic's at, folks. That's where the magic at. And so if you want to know why did the operating income go up like that, it's math, okay? It's mathematics, very simple math. That's why operating income went from $2.5 billion in the same quarter last year to over $11 billion in this quarter they just reported. Also, interest income, interest expense kind of cancel each other out there. Other income, they did have a little positive gain. I believe that was because of Rivian stock in this past quarter, although Rivian has weakened recently, so that could be a little bit of a drag for next quarter. We'll see what happens there. Income before income taxes, over $12 billion in income before income taxes versus less than $3 billion in the same quarter last year. Jeez. Net income, nearly $10 billion for the company versus $2.8 in the same quarter last year. And diluted EPS, 94 cents versus 28 cents in the same quarter last year. Man, if that wasn't good enough, look at the balance sheet. $486 billion in total assets now on the balance sheet, $49 billion plus in cash and cash equivalents, and another $14 billion plus in marketable securities. Now, let's talk about the stock price and what happened, okay? So, the stock price after the initial earnings came out blasted higher. And then it plummeted down. And basically, right around the time the conference call started and was just starting to run, the stock actually hit a low in after hours. And then it came flying back up. So what did Jassy say on the conference call that was so big? I'll tell you what he said, okay? And if you were on my Twitch live stream today, you know what he said. Basically, the gist of it is Andy Jassy, CEO of Amazon, basically called a bottom on AWS. Without saying this is the bottom and things are just going to get better. If you listen to, they asked him a million different ways about AWS on the call. And if you read through what that man said, basically it sounds like 24, 25 are going to be looking really good for us in regards to AWS. And it sounds like there was a lot of companies that basically, if you don't know the story on AWS the past 12 to 18 months, basically there was a lot of companies that had been watching their costs in a substantial way. And so all these companies pulled back and they wanted to spend less and less in AWS, and AWS helped them do that, right? And so they cut back on this, they cut back on that. Well, none of these companies and a lot of these businesses are pretty much to a stage or getting close to a stage where they don't really have much more cost savings they can do when it comes to AWS. That's about it. And so now AWS is in a very strong position where people are, a lot of these companies are getting a little more focused on growth, AI moving forward, right? Which is a huge benefit to Amazon. And they're getting out of this whole, I can call it scarcity mentality, right? Just as an individual like us, we can get into scarcity mentality. We can be in abundance mentality. Well, for the last year or so, a lot of these companies were in a very much scarcity mentality, right? How do we save as much as possible? Save, cost savings. Now it looks like going into 24, people are much more focused on expansion. How do we expand our business? How do we, grow bigger and bigger rather than contraction? Okay, and that's a whole different mindset. And it happens in organizations, it happens in companies, and it's healthy. So, if you're always in scarcity mentality, that's horrible. You're going to go bankrupt, okay? You'll go out of business. If you're always in abundance mentality, that's also not healthy, okay? You end up being a Zuckerberg, just spending like crazy on the metaverse, right? So you don't want to necessarily be in any of those categories. You want to be more on the abundance side as a company or an individual. But every once in a while, you kind of got to join the scarcity side for just a bit to kind of watch everything that's going on there. And so that's kind of where I would place, a lot of AWS customers over this past year or so. So I thought that was big. So overall thoughts on Amazon as a shareholder of the company, okay? E-commerce is strong. It looks, the whole goods recession that we've kind of been in looks like it's come to an end now at this point in time. And based upon these earnings I'm starting to see, based upon Meta's numbers, Google's numbers, based upon Amazon's numbers, it looks like the goods recession is over. And it looks like we have come out of that now, and it looks like, if anything, we're getting back into growth mode. And I think it's actually going to be a pretty decent Christmas out there. Profitability is explosive at Amazon, and I think the profits are going to continue to skyrocket here in the next few quarters, and then we'll probably level out for a bit. International flipping from massive, epic, multi-billion-dollar losses in a quarter to now getting probably to profitability or something very close to profitability is massive. I love that. AWS looks bright for 24 and 25. Costs are in control, very in control when it comes to Amazon, the most in control I've seen. Advertising is strong on Amazon. They continue to be an advertising growth beast. And Jassy's a big boss man, and he's running the show, and he's running the show damn good. So overall, could I be any happier in regards to Amazon earnings? I really couldn't. This was it. Like, the conference call was amazing. It was probably the best conference call so far I've listened to this earnings season. And damn, man. Those numbers were incredible. Absolutely incredible. Alrighty, next up here, Enphase. So Enphase stock is crashing. remember, folks, Enphase stock was $300 plus at this time last year. Enphase stock after hours is $80. There's a potential that Enphase could be in the 70s tomorrow during the trading day. Yes, the 70s. And once again, at this time last year, Enphase was a $300 plus stock, all right? So Enphase down massively after hours. What's going on here? Well, they have two major problems. This is problem number one. Problem number one with Enphase is if you look at a sequential basis, their revenues are starting to drop. By the way, they missed analyst expectations from what I saw on revenue in general, which is not good. But also, look at this. In Q2, they did $711 million in revenue, and that just dropped down to $551, right? Even worse, operating income went from $170 million in Q2 2023, which is the last quarter, right, to this quarter, $117 million. Talk about a drop. Net income went from $157 million to $113 million. Diluted EPS went from $1.09 to 80 cents, all right? So clear massive deceleration is going on in Enphase. But that's not the worst part, okay? And remember, SolarEdge already kind of prepped a lot of people in regards to what Enphase numbers are likely look at. When Enphase reported what they reported, a lot of people are like, oh, okay, things are pretty bad here. But there was a hope that things aren't quite as bad with Enphase because Enphase maybe isn't as exposed to the European market as somebody like a SolarEdge was. That was at least a belief, and that's what a lot of bulls were kind of talking about, right? Folks, this is so much of a disaster in regards to what's going on with Enphase. It's hard to even explain this. I'm just going to show you the numbers, okay? Here's what's going on. This is a way bigger problem with Enphase right now, okay? Enphase was supposed to do $566 million in this current quarter, right? And then they were supposed to do $576 million in next quarter, the December quarter, right? Which, keep in mind, that was going to be down 21% as it was. So, folks, they were going to report a horrible revenue quarter was expected from Enphase, 571. Keep that number in your mind. 25 analysts had numbers. 571 is what analysts were expecting. 21% drop. Enphase just said, you guys aren't even close. We're going to report way worse. Look at this. It's game over. Enphase said the revenue for this upcoming quarter is going to be between $300 and $350 million. That's a $325 million midpoint. Folks, $571 million was the average expectation, the average estimate. The fact that the company says they're going to do 325 at the midpoint, I don't know what to say. It doesn't get worse than that. I've been in the stock market 15 years, folks. I don't know if I've ever seen a revenue guide that big of a miss from a company that's fairly popular, which Enphase is a fairly popular stock. Unbelievably shocking. It's one thing to miss numbers. It's one thing to, we missed by 5%, 10%, whatever. It's another to do what Enphase just did. That's a whole different ball game there, folks, okay? My gosh. And that goes back to what I was trying to tell people about and warn people about, right? I've talked about Enphase last, several days on the channel. And I said, you got to be careful with Enphase because it might look cheap. The stock might not be cheap at all. And sure enough, that's exactly what played out. People saw Enphase trading at 20 times this year's numbers or whatever and saying, oh man, stock's so cheap. Because Enphase never trades at that sort of valuation. Well, here's the problem. Enphase is likely going to lose money the next few quarters. Not make profits, lose money. Become unprofitable for at least the next few quarters. And then hopefully gain it back at some point in time. So when you're looking at these analyst expectations, just keep in mind, they're about to get slaughtered by analysts. Every analyst out there is going to cut their estimates in an epic way. And they're going to continue to cut and downgrade Enphase's stock. And so now it's got to go through that brutal cycle. But folks, the 491 that was expected for this year, that's not happening. The 614 that was expected for next year, that's not happening, okay? So although it looked cheap, it was actually just a trap. It was actually just a trap in the end. And so now, I will give everybody at least a little good news in regards to Enphase, because there's a little sliver of good news in regards to this Enphase story outside of just its balance sheet and its long-term track record. There's a little piece of good news, okay? So on the Twitch live stream today, I heard, we went through a bunch of things. Obviously, all the earnings that came out. We were listening to the Enphase call. We listened to the entire Amazon call. But we listened to the Enphase call, and there was some good news that came out on that. And basically, what it sounds like is, it sounds to me, based upon what I heard the executive say, is it sounds like in the second quarter or third quarter, inventory should bottom. Now, that's big and that's impactful, so that likely means the business model bottoms probably in the next 2 to 3 quarters. So that's great news. But don't get too excited about that. Don't get your hopes up too much, folks, because it still has to play out, right? It still has to play out. But if you want a sliver of good news, maybe we're 2 to 3 quarters away from the bottom in regards to Enphase. But in between that time and the next time, like, the stock could get brutalized. We don't know what long-term profitability will be. Even when the business, that's a problem. Even when the business bottoms, let's say it bottoms in the second quarter of the year, right? Let's say that's the peak bottom for the business. Well, we don't know what the profitability model is going to be looking like for Enphase moving forward. That's the problem, folks. We don't know. We don't even have a clue. Like, anybody that tries to say Enphase is going to earn this in 2024, no, you're literally just throwing out a guess. There's not a person on this planet, including the CFO of the company, that could tell me what Enphase's EPS will be next year. Not a person. It's one of those situations, folks. When you have this bad of a situation, it's ugly, and that's what's going on here. Okay.